All right, everyone, welcome back for another episode of Carnivore Trades. Today is Monday, January 24th, 2021. So markets turning green here after a big gap down today and a flush. We said in the weekend video that this was a possibility. We'd see some margin calling, and that ultimately we'd see the spiders get down to 420. I didn't think we'd quite get there this quickly, but that's the power of margin selling. And sometimes that's just how the market works. It's got to flush that out, and that those those margin calls have to be satisfied. You see the markets turn green here. I tweeted out earlier today that it was interesting to see the IWM not making a new low and Tesla not making a new low. Also, another leading indicator I look for is JP Morgan. That got to my 140 target. I've been telling you that guy that's going to get down there for a couple of weeks now, and it got there. This was also not making a new low as everything else was. So I had three leading indicators telling me that we were getting pretty close to a bottom. Sure enough, markets rallying off the lows, and now we're getting some short covering. So anybody who really shorted this hole down there is really probably feeling it right now. As all these growth stocks are starting to get a bounce. By the way, in Carnivore Trades, we're up 6.5% year to date. And I am in love with this market right now. I love the volatility, and this is just a swing trader's paradise right now. But in any case, so let's look at the market here. So spiders getting down to that 420 area. We talked about that level. Obviously, look at the volume coming in, major capitulation volume. So we have put in a short-term bottom. Now going into the Fed, it's important to understand this little sell-off here, which is, probably it's a little bit more than 10% correction now. This is not a tantrum. It's stocks repricing rate hikes, essentially. And the reason why it's so dramatic is because the Fed left rates so low for so long that, this is just what has to happen. Everything just got so far away because the Fed was just pedal to the metal. I mean, if they'd hiked rates a year ago, this wouldn't have happened, or at least not as dramatically. You wouldn't have moves like this on Netflix and, AFRM and, Teladoc, these stocks that have just been absolutely bludgeoned, over the last couple months or some of them for the last year. I mean, look at ARK. It's been in a bear market the last year. But, this sell-off here, look at SE. I mean, look at this was a $370 stock 2 months ago, and it's down to 140 now. So, a dramatic sell-off, but that's what happens when you leave rates at zero when they shouldn't be for as long as you have. And essentially, it's just a repricing. So I don't expect the Fed to back down. They're not gonna back down on their tapering. This is just right now the market's just having to reprice all this stuff in, and it's having to do it all at once, essentially. But anyways, let's take a look at some sectors here. So semiconductors, obviously turning positive. Got through that 200 moving average, got all the way down to this previous all-time high at 258.59. That one held. That was a major level. If we pull the chart back, look at how major of a level that was. Lots of chop in here. So, very oversold going into that. IGV has just been brutalized over the last 2 months. That getting all the way down close to the 320 handle. We'd kind of test this pivot low here. You had some pivots here from all the way back to 2020, really. And that one finally getting a bid here off of the lows. If we look at the diamond Dow Jones, nice gap fill there, all the way down at 331. So nice level there, and diamond getting a bounce. Triple Qs, this one really, just cut through this pivot like a knife, and then got all the way down to this previous all-time high set pretty much a year ago, way back in almost a year ago, back in last April. But look at that turnaround there. We're going to probably erase this channel pretty soon, as we don't even need it anymore. We have confirmed way below that now. But a major move here on the triple Qs, and nice reversal here for the market in general. Let's take a look at XLF. So XLF cutting through this trend line. We've been watching that one for quite some time now. Also kind of coincides with the 200 moving average. So it looks like they are going to save the XLF here. And close it above that 200 MA with good volume. So financials continuing to be in a good position here, at least relatively speaking to the market. Look at that tail candle on the broker dealers there. Going down and testing this pivot all the way back to July. So a big move there on broker dealers. Goldman, nice turnaround. I said it should get down to around 320. Didn't quite get there, but nice little tail candle for Goldman. Morgan Stanley, this one actually a really strong name right now in financials. Didn't even make a new low from last week. So Morgan Stanley holding up really well here, and financials generally outperforming overall. Also home builders, nice little reversal candle there. That's a big time engulfing reversal. Look at the volume. So this should get a nice retrace up here, and over the next couple of weeks. Same thing really across the board. XLE, nice drop into the 20 moving average. This is getting a nice pop here. So energy continues to be strong. And again, there's a lot of geopolitical rhetoric going on right now with Russia and so on. So no big surprise. Energy is strong as well. XOP, OIH also holding up. Crude, really, we talked about this last week. Everything else was selling off very sharply. And crude is, just basically coming off the highs. That's really it. I'm a little surprised that we didn't see a little bit more dumping in crude just from maybe like margin selling and so on. But, with the geopolitical tensions, I guess it makes sense overall that crude is holding up. Nat gas also kind of just holding this pattern here. I do think this is setting up for a move lower, though. That was a pretty nasty rejection, and it's not getting that great of a bounce off of this previous level. That this was supposed to be a bearish pattern, and it failed. And so usually those become support when you come down and test them, and it's not really getting that much of a bounce here. So tells me that natural gas does have another leg lower in it. Dow Transports, same as everything else, getting a nice bid here, a nice reversal. I said that in the weekend video, it could get down to this level here around 15, maybe a pierce of 15, and that's exactly where we got today, just below that low of the day for the transports was 14,876. So just getting below that 15 handle and a nice reversal there. Dollar index. So this is green. Again, a risk off environment. Dollar is going to perform well. It's a nice pop here. I don't think it's quite ready to break out and move higher yet, but dollar performing well as you'd expect it to in a risk off environment. Also performing well today is gold. So everything else selling off, and look at the GLD intraday gapped up, sell off, and then a higher high. And so gold is really behaving like it should. It's behaving like a store of value, a safe haven type asset here. And it is starting to flag up a little bit. So maybe it does want to build a little base and attack that 1860, 1870 area in the near term. Silver not doing as well. Same thing with platinum. So these are a little bit more industrial metals here, and the same thing with copper. So that could be part of the reason there. But palladium, however, is very green on the day, and coming up to challenge this 2210 area. So we'll see if that can get up there. I don't know if it can get through that right now, but palladium is holding up right now. Let's see. So we got to talk about Bitcoin. So we'll flip over here. There we go. So Bitcoin, again, nice reversal, just like everything else. Nice little tail candle. And I told you months ago that this was going down to 32,000. Some people said I was nuts and that I was an idiot, and that I was going to get my head ripped off and I was going to feel like an idiot when Bitcoin is at 100K. But here we are. Got down all the way down to the 33 handle today, and Bitcoin is reversing. I do think Bitcoin probably comes up, and we're going to get a good rip your face off rally here across the board. It's not just going to be crypto; it's going to be everything. And we may come back and test this trend line. So maybe we'll get up to this. Back test this area. At the very least, we'll get up to probably 42. But I think there's a good chance you could get up to 44, 45,000. Again, maybe back test this breakdown trend line. After that, it's another story, though. Again, I do think there's another leg lower in this market overall. There's the closing bell here. Let's go see where the spiders closed. So 439.60. So a nice pop into the close. A little bit of short covering going on. Nice thrust there on the semis. Look at Apple. TBT ripping higher. Let's look at rates here. So the 10-year was lower today by a little bit, but the 30-year did hang on to some gains here. Again, I still think yields are just kind of in a backing and filling mode. And I think whatever the Fed says Wednesday is probably going to be a head fake, or at least we'll see a head fake for the market. I think if we get some type of a bounce here tomorrow, which we probably will, and we get the Fed to essentially, double down and say, hey, we're not changing our policy, you'll probably see some type of a knee-jerk sell, and I think that will probably give us another leg up. So we may have like some sort of an ABC up move here over the next couple of days to weeks in the market. That's kind of what I've generally got priced in here or penciled in for the next, the near term here. But again, we are expecting some more volatility to play out later in the, maybe next month, maybe into March even. Speaking of volatility, one last look here. Let's take a look at the VIX. So we said that margin selling was likely to happen if we got back above 30, and especially if we started challenging these pivots. We got all the way up to the 40 handle, or just under it, 39 or 38.94 there, high on the VIX. So big move there for volatility, the highest since really 11 months ago. Actually, just about a year ago. So 129.25 21 was the last time we were up this high in volatility on the VIX. But look at how high off the highs we came, or how far off the highs we came today. VIX still closing just right on that 30 handle, however. But again, market was really oversold, and we saw some margin selling here, and now we're getting a nice bid. This is capitulation, at least in the near term. Doesn't mean we can't have a leg lower in February or March, but for now, the market has bottomed out. Anyways, guys, you take care. Come join me on Patreon. We're moving over to the new website on February 1st, and we're absolutely spanking this market right now. We're taking our shorts off right at the bottom, and we're going long at the bottom, and then we are reshorting right at the highs. And we've been rinsing and repeating that strategy, and we've been killing it really since late November doing that. And this market is just a swing trader's paradise right now. Anyways, guys, take care. I'll talk to you all tomorrow, and have a great rest of your night.